Hi, welcome to the Interaxis YouTube channel and Interaxis.io. We want to go into a series within the decentralized finance space. We want to go into a series about risk and all the risks that there are. There are so many people on Twitter and Telegram and LinkedIn and everything saying this is so great. You can get these interest rates. You can get away from banks and everything. But what we really have to evaluate is what kind of risks are you taking with your money? Because when it comes down to it, what you're really doing is you're potentially risking your money. And that's what we want to talk about. What are some of the risks you might be taking in the decentralized finance world? Of course, to start talking about risk, I thought we have to go back and start talking about maybe some of the technology and some of the other concepts before we go forward and talk about what all the risks we're taking. So in order to talk about risk, one of the concepts, technologies we're going to talk about is smart contracts. And in this particular video, we're not going to talk about the risk of them. We're just going to talk about what they are. Because in several videos so far and in several things you can find online, we talk about smart contracts quite a bit. And I just wasn't sure if we had discussed them at length enough within our videos to where when I talk about the risks of them, the risks of them, that it's completely understandable. So, start here. What is a smart contract? A smart contract is essentially a self-executing piece of software, right? It happens on its own. You don't have to hit go or play or yes or click or anything. It just goes on its own. So what's an example of a smart contract? Well, a really easy one is something like a subscription, right? So I, for instance, have my Netflix subscription, and it's $15 a month. And when I started it, I said, okay, here's my my credit card number, and go ahead and charge me. I'm up for the subscription. So every month, the first of the month comes, and Netflix goes and charges my credit card, right? $15. Now, one of a couple things can happen. If the charge goes through, if my credit card company says, okay, yes, process the $15, now I can go watch Netflix again for a month, right? I'm paid for the month. Now, if for some reason this $15 does not go through, so this is a yes, if this is a no, then what happens is I get an email saying, hey, this didn't go through, and my ability to watch gets cut off, right? So if I go to Netflix at this point after this charge has not been able to go through, and I try to watch, I'm going to get a big message that says, hey, we had a problem charging your credit card. All this happens automatically. This is just software that does it. Okay, so this is obviously currently, as far as I'm aware, not happening on a blockchain. This is just software that Netflix is running. My guess is it's hosted somewhere at Google or AWS or something like that Netflix is running. That is able to perform all this. Now, companies like Stripe and Square and other credit card processors have basically created this software that allows for companies like Netflix and magazines and apps and all sorts of other players like that to offer subscriptions. And companies have built the software in the background to say, look, we're going to process these credit cards for you, and our software is going to give you the ability to automatically charge credit cards or automatically charge bank accounts every month or every year or whatever it might be. And when the charge either goes through or doesn't, we get to decide whether the user is going to keep using the service or not be able to keep using the service. All right, it's actually very simple. The only thing that happens is as of the first of the month or whatever day of the month that my subscription renews, that's what's going to trigger this. And that's why it's a smart contract, because I don't have to do it. There's no one on the back end at Netflix or the credit card processor or anyone else that's going, okay, it's the first of the month, I got to process all these credit cards, right? It just happens. Now, in this case, an important thing to note, this date, right? In this case, it's a date. This is what's called the oracle in this case. The oracle is is the date. It's some sort of calendar that this is going on that says, as of this date, this is the date that's going to trigger this piece of software to run, for this action to actually happen. Okay, and once this happens, then there's a series of if-thens, right? And what's essentially happening is all the time the software is like, is today the day? No. Is today the day? No. Is today the day? No. And when it says, is today the day, and the answer is finally yes, then it goes and processes the credit card. And then, did it go through? Yes. Okay. Now, here's what you can do. Did it go through? No. Here's what's going to kick off. There's going to be an email, and I'm cut off from watching Netflix until I can somehow reconcile this situation. Okay. So that is essentially what a smart contract is. Now, that is not a smart contract on a blockchain or in decentralized finance or anything, but that's the gist of a smart contract that probably most people are very familiar with. So, how is it different in decentralized finance with a blockchain, right? Well, as I said, why is it important and what are we looking for? As I said, that would be happening on either Netflix servers, most likely on some sort of payment processing servers in the background. So it's very centralized, right? It's kind of one company or one set of servers handling all that information. And on top of that, that company doesn't necessarily, they don't have my credit card. I haven't said, here's my $15, hold on to it until such time as the first happens, and then you can go ahead and pay for it. What I've said is, here's my credit card number. On that date, on the first or whatever date it is, on that date, you may access my credit card number and try to get the payment, and my bank will tell you whether or not they're going to give you the $15. The difference in the decentralized world and why smart contracts are so important is now we have digital money, essentially, which is cryptocurrency, right? And cryptocurrency is natively software. It's natively code, right? Which means you can tell it to do certain things. It's not sitting in my bank account. It's sitting in my digital wallet, right? So now what you can do with something like a smart contract here, let's say you have, again, Adam and Ron, and this would be a very simplified one. Let's say we made a bet on a football game. Okay, so Adam takes the Packers, and Ron takes the Cowboys. Right now, on a normal bet, so not a smart contract, not a cryptocurrency bet or anything like that. But on a normal bet, if we did this, we would shake hands, and I'd say, "Look, I'm taking the Packers," or I'd say, "I'm taking the Cowboys." We're going to bet $100 on it. We're going to watch the game, or at least look at the score, and based on that, whoever wins the game gets the money, right? And Ron might either give me cash, right? I know him, so we trust each other, so we figure, we're good for it. He might give me cash, he might give me a check, he might Venmo, he might Cash App, whatever he might do, but he's going to give me the $100 because we know each other. Okay, as we've said many, many times before, this relationship, the fact that we can meet each other and do that, that doesn't scale. Okay, you can't do that millions and millions of times anywhere in the world, but between just people who don't know each other. So another alternative is, let's say Adam and Ron don't know each other at all. We're hanging out in some football chat room or whatever, both of us, in different parts of the country, and I say, "Hey, Ron, I don't know you, but I like the Packers," and Ron says, "Hey, I love the Cowboys," right? So I'm taking the Packers, Ron's taking the Cowboys, and I say, "Okay, Ron, let's bet $100 on it," and he goes, "All right, you're on." Now, I don't know him, and he doesn't know me. We might go, "Hey, how are we going to settle this bet? Like, how am I going to make sure that if I win this bet that Ron's actually going to pay me? How's Ron going to make sure that I'm actually going to pay him?" Right? Well, what we could both do is if there's some sort of escrow account, right? If there's someone in the middle that we both trust, and this is what used to happen, right? If there's someone in the middle that we both trust, you have someone who's escrow or is kind of playing the role almost of the bookie, but we would both put in $100 here, and whoever wins, so we would each put in 100, so there would be $200 here, right? So this person's that we trust is holding our money. So when the game's over and the Packers win, he gives me the 200. 100 of it was my money back anyway, and the other 100 was Ron's, because I don't know Ron, right? But we agreed to make this bet, and this is how we make sure that the other person's going to pay, because they already have the money. Well, this is essentially the essence of a smart contract in the decentralized world, right? Because the way this would work here is we digitally might go into some sort of betting type app or betting pool or whatever, and I might say I'm willing to take the Packers, and I'm willing to bet 100 die in this case, and Ron says I'm willing to take the Cowboys, right? And what we do is now we're both, instead of this escrow agent, we're both contributing 100 die to a smart contract, right? And the smart contract, because this is electronic and this is electronic, all it is code that's saying this die, I can no longer spend that anywhere else. It is locked up. So when we say things like locked in a smart contract, that's what they mean. It is locked into this smart contract. And this smart contract, once we execute it, we say whoever wins the game is going to get 100 die. Ron's 100 die are locked in there, as are mine. My 100 and his 100 can't go anywhere. I can't spend it elsewhere. Okay? He can't spend it elsewhere. The smart contract potentially lets both of us know, hey, you guys are both in now. I got the 100 from both of you. And this gets put onto the, in this case, probably the Ethereum blockchain. Okay? So it's out there. That bet is there. It's immutable. It can't be changed. Now, what this smart contract is looking for is something to say, hey, the game is over, right? And it just keeps looking. Every time there's a block process, it's going, hey, did the game end? Did the game end? Did the game end? Finally, the game's going to end. And some oracle is going to say, hey, smart contract, Packers won. Smart contract says, oh, okay, if the Packers won, then Adam gets the 200 die from here, and it gets released to my wallet. It doesn't even know it's Adam. It knows it's my wallet. This wallet and Ron's wallet were the ones that were making this bet. That is a smart contract. Okay, so now we can take that several steps further, right? Because what we're doing is we're essentially able to lock up terms, lock up money potentially. So when you have something like a loan, right? So we'll take a pooled loan, for instance, which is essentially a smart contract, right? I'm putting my money, we'll call it 100 die, into this pooled loan. This is now this is a smart contract, right? So what it's doing is it's a piece of software. So a smart contract is just a piece of software that instead of running on someone's server, whether it's a bank processing or a credit card processing company or a company like Netflix is processing these, it's running out on the blockchain. It's a piece of software that says Adam's 100 die went in here, and it's being held in this pooled loan. Right, and so there's money going out here from people who are borrowing, and they have, and they're getting a certain interest rate. And the smart contract is basically just this protocol, whatever it is. The smart contract is essentially has an algorithm in here that's calculating. Okay, on this block, here's how many people are borrowing. Here's how many people are lending. Therefore, this is the interest rate these people are having to pay. This is the interest rate these people are actually receiving for the money that they've contributed, right? So this is all just computer code that's doing it. Now, the important thing to note this is computer code, and there are a lot of loans and software like this that is essentially computer code. The difference is, in most of them, you can't lock up money like you can in this. This is actually taking my 100 DAI, and it is in here. It is part of the smart contract. Now, if this is Compound or DYDX or Fulcrum or something, it's pretty liquid. I can go get it out, but I have to execute some sort of code. I have to execute somehow to actually withdraw my money. So this is a bunch of code. Now, if I want to do, say, a peer-to-peer loan, right? So here's Adam, and here's Ron. This is where it gets even more interesting, right? Because now I might say, look, Ron, I'll lend you 100,000 DAI, but I need some sort of collateral, right? So Ron says, all right, I will give you, I don't know, I haven't done my math. I will give you 50 ETH as collateral. Well, this is locked up in the smart contract. So what this is saying is, part of the smart contract might be Ron's wallet is going to pay Adam's wallet, 1,000 DAI per month. Okay? So this is all part of the smart contract, and this ETH is locked up in there until such time as either I probably maybe hit a button that says, okay, you can release it, or every time Ron pays off a certain amount, some of this ETH potentially goes back into Ron's wallet. But it is locked up in this smart contract for now. Ron can't go spend this anywhere else. Okay, this is locked up as collateral. He can't go spend it elsewhere. It's not like something I just sign on a piece of paper that says, hey, bank, you have my house as collateral or something, and I can go spend money elsewhere. Or, hey, bank, you have X amount of dollars of mine, cash as collateral, believe me, I have it, but then I can go spend it. No, this ETH is not spendable because it is locked in this smart contract. Okay, so that's what's important. When we start going through eventually all the different risks we're taking in decentralized finance, and I really want to break those down because I want to make sure that people really understand what the risks are. It can be decentralized finance can be great, but it can be very risky. This is one of the concepts I had to get across in the technologies to make sure that when I go and start talking about all the risks, smart contract risk is going to be one of them. Because again, this is just code. This is just code. It's computer code that someone has written, probably several people have written, hopefully it's been audited, but it's still computer code. It still probably has vulnerabilities. Okay, so that is a little bit about the very, very basics of smart contracts. I should have prefaced it, and I didn't preface this by saying I am not a technologist, I'm not a programmer. So I really apologize for my friends that are, and I've really dumbed this down. I don't want to say dumbed this down. I really made this simple, as simple as I could to hopefully understand, because the gist of decentralized finance is we want so many more people in the world to be able to have access to some of these financial features that we really only have now in the developed world. But I want everyone to understand a lot of these concepts so that when we get into the use and the risk and everything else, you understand a little bit about how smart contracts work, so you can see, one, how some of these protocols are built on top of each other, and some of these apps are built on top of each other, but also what the risks are and how they can fall down. So that's smart contracts. We'll do a few more of these, talk about the risks we have. And anyway, please subscribe to the YouTube channel. Please visit us at interaxis.io. Our email is info@interaxis.io. Twitter @interaxis8, the number 8. Please let us know if you like these videos, if there's anything else you want to hear about. We have gotten a lot of requests recently, which is why we're working on some of these. Please let us know. We're here and we're happy to help. Thanks.